All right, I want to show you what's happening with the price of oil today. It is higher after several days of weakness. Part of this seems to be investors listening to what Donald Trump has been saying about Russian oil and whether or not there are buyers around the world of Russia's oil assets that dare to defy the U.S. president. Will we see secondary tariffs directed at countries that do continue to buy Russian oil? That's one tariff storyline we're watching. Keep in mind that the president has also been talking about duties on chips and pharma imports soon. And then from the Canadian perspective, the Prime Minister, Mark Carney, has been saying over the last 24 hours that Canada is going to look at whether to remove some counter tariffs against the United States, suggesting that retaliatory tariffs should be designed to maximize the impacts on the U.S., but minimize the pain for Canadian businesses. Let's bring back Brianne Gardner of Velocity Investment Partners at Raymond James. Brianne, what in a world where we go not an hour without a new headline on trade and tariff tensions, how do you make sense of it and try to make some sound investment decisions?
Yeah, I think it is a little bit of data dependent, always having a plan A and a plan B, and what if. I mean, even with markets, I think a little bit elevated and stretched at this point, even after the brief sell-off we saw last week. We are a little bit cautious on the path ahead, especially headed into seasonal weakness. August and September do tend to be weaker months before we head into the fall. And also seeing the Fed and Bank of Canada both hold rates. Obviously, now seeing the Fed a little bit pivot to more dovish, and the market's odds now for a September rate cut are now close to 80% out of the U.S. So something that we are watching closely. I do think tariffs, yes, are re-entering the macro conversation front and center. We saw the U.S. really reaffirm their new rates on August 1st, lifting the average tariff to over 18%, really a level we haven't seen in decades. And I think everyone, especially Canadians, are wondering, how is that going to impact us? We are still waiting to hear the status of these trade talks with Canada. Negotiations have resumed, and Canada does appear confident that a deal will soon be reached. So as of now, there isn't one, but Canada, as a reminder, is the U.S.'s third largest trading partner behind the EU and Mexico. So it would be favorable for Trump to move forward with a deal. And, while he did recently raise tariffs on some of Canadian imports to 35% from 25%, obviously with those exemptions under the USMCA, keep the effective rate near kind of 6 to 7%. But again, that is up for renewal in 2026. So we could have additional tariffs in the pipeline in the year ahead.
All right. Well, it's interesting. You're the second guest we've had today that has started to remind our audience that as you move into September, things can sometimes be a little bit choppier for stock markets, especially when we've seen enthusiasm. Whether people will blame the tariff uncertainty on any selling pressure, assuming we see one, remains to be seen. But given everything you're saying, how do central banks fit into the mix? I mean, obviously, the Bank of Canada has been monitoring the tariff story very closely, but they've been basically in pause mode after all the rate cuts we'd seen. And increasingly, especially after that U.S. jobs report last week, there are market participants that would not be surprised to see the U.S. Federal Reserve cut interest rates as soon as next month. So how are you watching that story as an investor?
Yeah, I think everyone, even if we reflect back to the beginning of the year and economists' outlook for 2025 for the S&P 500 or the U.S. Particularly, there was pricing in, the market was pricing in 6 rate cuts for 2025, and really we haven't seen any. So, we are starting to wait and see, are they going to start piling up now? Will we start to see cuts headed into, the end of 2025 and into 2026? For the U.S. Even if we are looking at the inflation numbers out of the U.S., they are coming down. Are we going to see a reignition with these tariffs? That will be a little bit of wait and see as well. a lot of people are asking, are we still bullish on the U.S.? I certainly am. I see, even with the economic data, the amount of money coming into the U.S., the benefit of the AI businesses that are booming out of the U.S., we are tilted now a little bit more. We were a little bit more equal Canada-US. We now have started making some tactical changes, expecting to see some cuts out of the US and a little bit of pop in the US market that the TSX has been outperforming. So for us, we do see some upside there, and we wouldn't be surprised to see some heightened volatility, as you mentioned, yes, coming into seasonal weakness, but also off the back of kind of two muted years, 2023 and 2024. And we have only seen a short correction in April that recovered quite quickly, one of the fastest in histories. So for us, we wouldn't be surprised to see a little bit of a single-digit sell-off, 6 to 9%, before we head into another up leg in the market here.
All right.